I'm Jennifer Smith with the Smith team at Keller Williams Realty, and welcome to my video blog. Today I have a great guest that I'm interviewing, and you'll see that we're doing a little web chat here, so it's a great way for us to communicate and get some information to you guys regarding home mortgages and the process and how long it takes, and pretty much any question that you may have, we're going to try and answer right here on this web chat. My guest today is Eric Weiss with AmeriPro Funding, and he's my preferred lender. I've been in the business for almost 10 years, and Eric Weiss is the first lender, really and truly, that I've ever worked with that I have seen do such a fantastic job with getting my clients the best mortgage rates, having the best process in place to get the job done, and on top of that, giving phenomenal customer service. So, Eric, welcome, and I'm so glad to have you today.
Thank you, Jennifer. Such a privilege to be here.
Good. Okay, well, so let's just start real quick. You know, we're coming into the very busy time of the season where I have lots of folks calling me for looking to buy a house in the spring. We're getting their homes ready to market, and so they're going to be needing to look to find something. And so kind of want to talk about the process and educate people on what that process looks like. Okay?
Perfect. Let's do it.
Okay, perfect. Well, first thing is, how long of a process does it take? I think this is a good question for not only my buyers, but it's also a great question for sellers when their homes are on the market and they're looking to accept a deal. How long can someone expect the loan process to take?
Okay, well, there's really three parts to the loan process. So the first part would be your pre-qualification, which I can typically do that same day. So you fill out an application, provide your income and your assets. I can pull your credit and provide a pre-qualification letter saying that you can purchase a home. From there, we do have a pre-approval process, which typically takes about 10 business days, where that actually goes through underwriting. We have a complete approval so that you have a stronger negotiating when you're going out to write a contract. And then overall, if you take a step back and look at the entire process, that would be including the third part, which is closing, you're running a little less than 30 days.
Okay, great. Well, that's really great. I remember in the past, and it's been closer to 45 days, so that's great news for people.
Yes, we try and streamline it the best we can. So.
Okay, so Eric, you mentioned two different terms just a moment ago. You mentioned pre-qualifying a buyer, and then pre-approving someone. Tell me what the difference is between those two.
That's a great question, Jennifer. So the difference is on a pre-qualification, that means someone's applied. I have looked at the income and the assets, and I determined that they qualify for the requested loan amount. On a pre-approval, that means that the borrowers have gathered all their income documentation, their assets, their bank statements, etc. It's gone through processing, and we've sent it into underwriting, and the underwriter has given their stamp of approval. So pre-qual is basically the licensed loan officer up front saying, yeah, we can do the deal. A pre-approval is an underwriter giving their stamp of approval.
Great, and I know from personal experience working with buyers that, looking at it from a seller's point of view, you definitely are more likely to get a better, if you're in a multiple offer situation, a seller is definitely going to like having the pre-approval versus just a pre-qualification. Isn't that right?
Absolutely, yes. So the pre-approval process gives you a much stronger buyer and a much stronger way to negotiate with that seller because they've actually been through the system, as opposed to a pre-qualification letter where really, that's depending on the quality of the loan officer issuing the approval. So. Okay,
great. Well, so, right now, and I think you probably get this question very often, what are the current rates? What trend have you been seeing?
Well, rates have been cooperating with us, so they continue to get better. Anytime crazy things happen over in Europe, then money tends to flow into the United States. When money flows into the U.S., then we can borrow more cheaply. So right now, rates are close to all-time lows again, in the middle 3s to 4%, depending on the product. And so it is a great time to buy if you're out there and looking and interested.
Well, and often I have the question of, well, I mean, should we buy now? Because what if they go lower? And my answer, I don't know about you, but is always, well, we know today what the rates are, and they're pretty darn good. So, you never know. They could go higher, right?
That is true. I think they'll be somewhat flat this year. I mean, they're at great rates right now, but there's another way to look at this, Jennifer, and that's in Austin. Last year we saw what, an 8 to 10% appreciation. So if they were looking at a $300,000 house over 12 months, that's $30,000. That's $2,500 a month in appreciation. It would take a rather dramatic drop in rates to make that up. So it's always a great time to buy.
Well, that leads very nicely into my next question. And how does somebody find out what they can actually afford when they're ready to buy a house?
Yeah, so I have an online application. They can click on it, apply online, and they can schedule an appointment to come and see me in the office. And we would review the application and then ask a bunch of questions about what they intend to do with the property, how long they want to be in it. And the most important one for me is what they want their monthly payment to look like. So there's many times where a borrower may qualify for more than what they want to spend. And so the last thing we want to do is put someone in a situation where they're house poor and they can't pay for their traveling kids' soccer, right? And so when we first sit down, that's my most important question is, what do you want to spend? And then we'll see if we can accomplish that goal.
Well, and I think that makes us a pretty good team, because I think, I trust wholly the counseling you do with our borrowers, and then we have a very clear picture when we go out what they're looking for and what they want to spend, and then ultimately my buyers, because of working with you, are always in a great position, negotiating position, because they do come in as strong, pre-qualified, pre-approved buyers, especially if we're in a multiple offer situation.
Exactly, and then everybody's on the same page, and we can all work together to accomplish their goals.
So another question I think you probably get oftentimes is how much money does somebody need to bring, to closing? How much cash do they have to have? And I know there's a lot of factors that go into that. So maybe you can speak to what type of loan it is, and then maybe speak to whether or not they want to pay mortgage insurance, etc.
Okay, yeah, great. There are certainly a lot of options, and so I referenced earlier that first meeting and trying to accomplish what they're looking for, and so we have great products out there with minimum down payments. So on a standard conventional loan, we can do 3% down. On an FHA transaction, we can do 3.5% down. And then on a USDA transaction, believe it or not, there's still parts of Austin and in the outskirts where you can get 100% financing. And so really it's a matter of what the borrower is looking to do. On a conventional loan, the more you put down, like you mentioned, getting rid of mortgage insurance. So if you put 20% down, you won't have mortgage insurance on a monthly basis. And so that's important to a lot of borrowers because, why pay insurance if you don't need to have it? So hopefully that gives you a general guideline as to what you're looking to put down. The important thing is, don't be scared. With the mortgage crisis, a lot of people say, oh, you got to have 20% down to buy a house. That's not true. We've got a lot of avenues for people for smaller down payments and reach their goals and get them into a house.
Eric, so tell us, give me an idea of what's included in the closing costs for people.
Okay, great. So closing costs are really separated into a couple different departments. One is your lender closing costs, which those are the costs really, the hard costs incurred to process, underwrite, and fund your loan. And then there's also title costs and third party like appraisal and credit report. And so those are all broken down and clearly defined on a closing cost worksheet at our first appointment application, and clearly spelled out. You'll know exactly what they are, and they're also specific to your product. Outside of closing costs are also prepaids, but your prepaid items are going to be your hazard insurance, your prepaid interest, and your prepaid taxes into your escrow account. So you'll get a breakdown of all that on a fee sheet, and you'll know clearly what to expect.
Okay, Eric, so when talking about prepaids, Tell me, I know people have to pay interest, prepay interest. Tell me why that is and exactly what that is.
Okay, great. Yeah, great question. So interest is paid in arrears on a mortgage. And so what that means, if you were to close in February, your first payment to us would be on April 1st. An April 1st payment would be for March interest. And so if you were to close, in the middle of February, you would have interest due at closing from the middle of February to the end of the month, because you do own the house and you do owe interest on that. And because your first payment isn't until April, there's no way to collect that other than at closing.
Okay, so Eric, when you were talking about just talking about having, your mortgage payment and the prepaids and what that looks like, tell me exactly what's included in the mortgage payment each month. I know it's not just what you're paying for that you owe on the house a lot of times. So help us understand what's included in a mortgage payment each month.
Yeah, so typically you also set up an escrow account, which includes your taxes and insurance. So your total payment would be your principal, your interest, any mortgage insurance, if applicable, your real estate taxes, and your homeowner's insurance. And that kind of makes things easier, and then the lender will pay your taxes and insurance when they come due, as opposed to you having to worry about making a big lump sum tax payment at the end of the year. The lender will just pay it for you because you've paid them 1/12 of what's due each month.
Okay, great. Okay, so now help me also understand what's the difference when somebody gets their loan at closing. They see a loan paperwork that shows what their interest rate is and what their APR is. Help me understand what the difference is on that.
Great question. We get it all the time. So your interest rate is what is reflected on your note and commonly referred to throughout the process. That will never change. It's fixed unless you go into an ARM or adjustable rate. We'll talk about that in a minute. But so that's fixed. Your APR is a calculation the government came up with so that people could shop their mortgage around and compare the fees and interest rate to one another. So that APR factors in your closing costs that you're paying, and then you can do an apples-to-apples comparison. So an APR is going to be higher than the interest rate, but how much higher, and then you would know which is the better deal, so to speak.
Great. Okay, so you just talked about a fixed mortgage versus an ARM, an adjustable rate mortgage. And, I mean, quite honestly, I don't really see very many ARMs being done now that our interest rates are so incredibly low. But help me understand and help the people listening to this understand what the difference is between those two.
Absolutely, yeah. A fixed rate, your payment's never going to change. So you're fixed at 4%, 30 years. Your principal and interest is going to remain constant every payment. The only way your payment changes is if your taxes and insurance change. On an adjustable, they typically come with lower interest rates to start, but then over time may go up. And so for a savvy investor, that might be a good idea. So an example of an ARM would be a 5/1. So it's fixed for the first 5 years, and then it goes into an adjustable. With rates being at all-time lows right now, there's really only one way for rates to go, and that's up. So you need to be very cognizant of that if you choose an adjustable, and typically have an exit strategy on the property that matches the fixed term, whether it's 5, 7, or 10 years of the 30-year term. Does that make sense?
Yeah, that makes a lot of sense. And I mean, I know an ARM makes sense for some folks, but right now I don't really see where it makes a lot of sense for the majority of people. What do you think?
Yeah, we do very little ARM business right now. 90-some%, or I would say upwards of 98% of our business is a fixed rate product.
Right. Okay. So, tell me, if somebody's looking to keep as little cash coming out of their pocket and trying to get into something, should they still pay for their fees out of pocket, or would you suggest rolling in, or is that even an option anymore?
Well, I mean, when you say rolling in, typically that would be done with the seller paying the closing costs, right? So otherwise, you're talking about a refinance. So, I mean, we certainly can look at it. In this market in Austin, Texas, a lot of times the sellers aren't willing to pay closing costs, but Jennifer, that kind of falls into your expertise when you're negotiating with the seller. If they want 3,000 towards closing costs, that might be able to be worked out. So.
Okay, so you're exactly right. I mean, we oftentimes in the past have seen a lot of offers that include sellers paying a significant portion of closing costs, and it's always nice to be able to talk with you about it prior to my buyers even putting an offer together, so we know kind of what their closing costs are going to be, and we don't put an arbitrary number out there that we can't match, right?
Yeah, exactly. So we don't want to have the seller pay 5,000 in closing costs and there only be 3,000, right? And then you're leaving $2,000 on the table. So we certainly want to match that up, product specific to what the borrower is trying to accomplish, and then you can negotiate with the seller.
Okay, great. So one question or one little thing you said a second ago about when we were talking about rolling in fees, you did mention the word refinance. And so when does somebody know that they have enough equity? I mean, what's the litmus test on figuring out if they should refinance their home or not?
Great question. So there's a lot of different reasons to refinance your home. We've done a lot of term shortening, and what I mean by that is, you did a 30-year fixed 5 years ago, you have 25 years left, and today I can refinance you into a 3% 15-year. So you don't really save money on a monthly basis, but you just eliminated 9 years worth of mortgage payments. That we do a lot of those right now. For those borrowers looking to save money on a monthly basis and they're willing to extend their term back out, we certainly can look at do a 30-year fixed again. Rule of thumb there is you want to save somewhere close to 1% on your interest rate. So if you're paying 5% now and I can get you under 4%, that'll make a lot of sense for you to do.
Okay, well, Eric, you've given us some great tips today. I have two final questions. The first question I have is, what is the absolute best advice you can give a home seller when they're when they're looking at potential offers on their homes? What's the best advice you can give them regarding potential buyers and their loans?
I would say don't be bashful and contact the person who is on the pre-qualification or pre-approval letter. And you can't get a lot of information, but you should be able to probably get a good feeling about the person. A lot of times there's also maybe a letter that comes with the offer saying how wonderful the buyers are and it's their dream home, right? But at the end of the day, you want to make sure they're actually going to execute on the contract and close. And so don't be afraid to reach out to that loan officer and say, hey, Sally Smith is buying my house and I just got a couple of questions about this letter. The main one being, are they pre-approved or are they pre-qualified?
Yeah, that's a great tip, and we certainly do that with every offer we get on our listings. Because it's always nice to say, hey, guess what? We're under contract. But that it's really not a done deal until it's closed, and you don't know that it's going to happen unless you have a really, really strong qualified buyer.
Right.
Okay, and then my last question is, what's the best advice you can give a new home buyer?
It would be, and this may sound a little selfish, but it would be to speak with a loan officer before you start looking at houses. And I say that for multiple reasons. One, you want to make sure you're comfortable with what the payment's going to be in that price range you're looking. And two, you don't want to go out and look at a $400,000 house and have the idea of everything that comes with that and then only be able to qualify for a $300,000 house, because your expectations are going to be set higher than they should have been, and so then it's hard to kind of go backwards. So make sure you speak to a licensed loan officer, get pre-qualified and pre-approved, be comfortable with the terms, and then go out and look at your new homes.
Well, I think those are great pieces of advice, and it may sound self-serving, but at the same time, buyers and consumers just need to know it saves them so much time and so much heartache if they're looking at something they can't afford. If that's no fun. So it definitely streamlines the process for them and makes it a much more efficient, effective process.
Yeah, exactly. And at the end of the day, that's what we're trying to accomplish. A smooth process, get them into the home. It is a stressful time moving and doing all that. So we try and do our best to accomplish the goals. And if we do everything up front, that tends to happen more often.
Well, Eric, this is exactly why I invited you to have this conversation today, because I tell you this all the time, but I really do believe it. And just for those of you guys listening, Eric and I work together. We are partners, working for the best of our clients. And we don't own each other's businesses. We don't get money from each other. All we do is make sure that we have our clients' best interest at heart, and that their deals get done the way they want them to get done, and everybody's happy in the end. So if you are looking to buy a home here in the Austin market, give me a shout at 512-532-5550, or email me at jennifer@smartservicesold.com, and we'd be happy to get you in touch with Eric Weiss at AmeriPro Funding. You can see his contact information here on the screen, and we'd love to have you partner up with him and us in purchasing your new home here in Austin. Thanks so much for listening. We are so glad to have you listening to our blog, and we hope that you have a great day and tune in again. Thanks so much. Bye-bye.